All right, guys. This is Futures Brizio here. It is about 1 o'clock on Friday, March 21st, 2025. Hope everybody's doing well. And I am not home, but I'm going to try to do a quick live stream here and just talk about some what's going on in the market today, as well as just review a simple price structure, price action type um, strategy here that you can use. Now, I do this mostly on the 4-hour chart and for my analysis. And it's basically just using, again, price structure, maybe a trend line or two here and there. All right, so let's just jump right in here. And if you're on the stream, make sure you jump in and say hi. If you are watching it after on the YouTube channel, make sure you smash that like button, subscribe to the channel, and leave any questions or comments below. And hopefully this is coming out all right, because I'm only just doing this off my laptop, so I don't have my other monitor to kind of see what I'm recording here. So I tried to check it beforehand on the software, so hopefully, like I said, this is coming out okay. All right. So we'll just start right here in futures, since that's what I have up here. And this is the copper market. This is the 4-hour chart of May copper. And basically, guys, what you can see here is I have this trend line drawn. Clearly, we're in an uptrend. Now, this trend line could have started differently. And if you're going to ever use trend lines, you have to be willing to adjust them as you go. And so, because originally you may have had it drawn like this, okay, where you was connecting this low, and then you see it break here and you think, oh, well, maybe now price is going down. But then you can see we had this 4-hour candle, broke it. But then the next one came right back and found support here and pretty much, wiped out that this drop. So clearly this was not the right place to draw this trend line. That's kind of a drawback with trend lines, right? They're very subjective the way you draw them, and depending how you draw them, you can get a completely different picture of what the market's doing, right? So if we drew it here and it breaks here, you think that we're entering into a downtrend, but we're not. I don't think. We're just basically these lows here, like this low, and especially this one and all along here, were all just waves within this bigger up move. Okay, so when it tagged off the trend line down here, all of this price action is all just part of this one impulsive move up. This is not really like a major pullback that you would mark with a trend line. But see, you don't know that at first, okay? In hindsight, it's very easy to say that, okay? Which is another reason why maybe trend lines aren't the best thing to use, okay? Because if I take the trend line off, let me show you the other indicator I have on here, which would have helped you still maintain not only your upside bias on this, but also great places to enter, is this 10-period simple moving average. Okay, that's all this is. It's just a 10-period simple SMA, simple moving average, all it is. And once you identify that there's a trend going on, basically what you're looking for is pullbacks underneath this trend line, underneath this moving average, and then you're waiting for upward price momentum to start again. So obviously we had this back here, but even if we just start from right here, we had price pull back under the moving average right here, okay, and then we went up, we pulled back again underneath, and then went up again, and then we had that just happen today, okay, assuming that this holds, and we had a price pull back again, and then head up. And so all you have to do from this 4-hour chart is just wait for areas like this. Okay, you just have to wait for areas like this. Now, if we go and look at a shorter time frame, because you don't want to just enter as soon as you see price go underneath this moving average, because you could have a bigger correction like this one that went on for quite a while before it finally went up again. Now, on this one, it happened to only just be one candle, right? If you had gone long here, you would have been fine. Technically, you probably would have been fine anywhere in here too, although these are not very impulsive candles, but still, if you had gone long anywhere in here, this one would have worked out. Okay, you can see on this most recent one, assuming that this uptrend does continue, we never got a bullish candle until this point. But if we go down and let's look at these two areas on a shorter time frame. Now again, this is the 4-hour. So let's jump down. We'll start on a 15-minute first. Yeah, turn off the scroll here so I can scroll back. And let's find those areas. So here's that first one, okay, that we saw on the 4-hour. And you can see price just chopped around for a while. And you could easily have just gotten in anywhere in here. So let's go down to this one. This was that smaller one, okay? And you can see what happened here. Price was trending down, okay? And then we were putting in, so this was the corrective move, right? We were putting in lower highs, lower lows down to here. And then what happened is when price got to this point right here, on this time frame, this is the 15-minute, we had this swing right here in the downtrend move, right? We had this move down. So as soon as price broke this area, then that would be your resumption of your uptrend, okay? So we had this lower high put in on the corrective move down, and then right about here, price broke through this structure level, basically above this, the upper end of this rectangle, and started going. Now it did pull back again, but chances are if you went in here, you'd have your stop sitting down below here, and so you would have had, you know, a little bit of drawdown, you know, price would have trended down for a couple hours here, and then it shot back up, okay? Now you can probably further refine that on like a 5-minute chart. So if we scroll back a little bit here on the 5-minute, that was around March 12th or 13th, so we got to go back a little ways here. There's the one that moved sideways, so it's before that. Okay, so here it is here. This is what I was just showing you, but it's on a 5-minute chart. Okay, and so here is the correction, right? Price is moving down, making lower highs, lower lows. Okay, and then at this point right here, it breaks this level. This is pretty much what I just showed you on the 15 minutes, just zoomed in. Okay, right here, it broke this level right here, and then it started, you know, pulling back again, and then it shot up. So anywhere in there would have been a good entry. Okay, so let's just go back to the 4-hour now. I don't want to dwell too long on the shorter time frames, but this is what I'm saying, guys. You identify a clear trend. You can use a trend line if you want, but again, you saw the subjectivity with the trend line, right? Do I draw it like this? Whoops. Now my trend line is messed up here. Do I draw it like this? Do I draw it like this? Right? How do I draw this trend line? Well, if you use the 10-period moving average, it's very dynamic. You don't have to guess, right? And as long as, in this case, when price was going up, as long as, so on this leg up here, and then we have this pullback, as long as price remained basically above this zone right here, which was the last major pullback, then we're still only looking for long positions, okay? And so that's basically what we have right here currently. We had price pull back underneath the moving average. We didn't obviously breach this area, so we're only looking for longs. If we go back to the shorter time frame, now I got into this trade late, but here was the move down, the corrective move down. Okay, let's go to the 15 actually. Okay, and we look at this move down. We had structure being formed on the way down here, right? All the way down, and then we hit this low, and then we start heading higher again. And on the 15-minute chart, about where I got in is actually the better entry, because here was our structure area right here. Okay, that made this low. So when this gets breached, I consider the downtrend over, and that is where I got in. Now you could further refine that on a 5-minute chart if you wanted to, because we have the 5-minute chart. So here it is on the 5-minute. Okay, let me see. Let me look at the 15 again. Yeah. Okay, so here it is on the 5-minute. Actually, we really can't refine this area any better on the 5-minute because on this move, this last leg down, I don't really see a good place. So the 15 would have served fine for this. So when this structure gets broke, then we assume that we're going back up again, and that's where I got in. Okay, but everything starts with the 4-hour trend. Okay, and so you can see I'm in this trade long right now. I do have a a pretty bland take profit area just back at these highs. Quite possible it'll go quite a bit higher, but because it's Friday and everything, um, because we could see a spike coming out when the market reopens Sunday, then I'd be willing just to take that and go with that. But the bigger point is just looking at these structure levels, okay? If we look at something like the DAX, and now we'll move over to the DAX. So this one's a little more interesting, right? Because you can see again with this, we had very choppy price action here, which makes this hard to read. Anyways, all of this in here. But again, if you draw a trend line, well, originally you may have drawn the trend line like this, all right? Because we had touch here, touch here, touch here, touch here, and then price broke through. You're like, oh, okay, price is going higher. I mean, price is going lower. And then we chop around here, and then boom, we shoot up and we go back to these previous highs. So maybe this wasn't the best area for the trend line. Maybe it's more like this, where all of this was just part of this impulsive move up, all of this chop. And this was the pullback that led to this move up. Okay, and you can see where we're at now. We're actually back to the trend line again on the 4-hour. And you can see I have a smaller trend line drawn here just to follow this move down. Don't technically need that because we haven't confirmed we're actually in a downtrend. So if we just ignore this one just for a moment, we'll take that off. We basically have this structure level here. So as long as price remains above this area, or if you wanted to be more conservative, you can even say down here. As long as price remains above this anywhere in here, then we're still in an uptrend, assuming that this trend line was drawn properly. Okay. And again, we don't even technically need the trend line because we can take the trend line off and we can look at all this price action going up here. And basically, we maintained all these structure levels. Now, right here, it got a little bit dicey right here, right? But technically, it held this structure level because even though it broke it, it closed back up, above this level right here. So this upside, higher highs, higher lows structure was never really broken. Again, it got really dicey right in here, but technically it did hold it. Okay, so we are still in an uptrend technically right now in this time frame, unless this area in here gets taken out. So now we have price moving downward below the 10-period moving average. So now we're going to wait for on the 15-minute chart for price structure to turn around. Now I do have an alarm set right here, which is a pretty aggressive entry or alarm, because if we really want to go by the price structure, we had essentially this area all in here kind of represents the upper end of this last move down. So price would have to get, come up, break through here, and then that would show you that the uptrend is continuing. So this is the more conservative way to do it. Chances are, if price does that, though, remember you'll probably get a pullback. Once it does that, it's going to come back and test again, and you have to be able to withstand that drawdown. So you can either wait for the pullback, or if you don't want to wait, because sometimes it doesn't pull back, it just goes, then just make sure you have a reasonable stop loss. In this case, I'd have my stop down here. This would invalidate my long thought, and that would also give you enough breathing room if it does break this structure on the 15-minute and come back and retest again. Now, perhaps we can go to a 5-minute and refine this a little bit more. Not particularly, though, which is where I have my alarm. I have my alarm set to basically take out this high right here. Okay, that's where my alarm is set, just above there. That's a little more aggressive. Just depends how aggressive you want to be. Okay, but conservatively, again, use the 15-minute chart, mark out structure, and this is a little choppy here. Put a line chart on. Not really much better with the line chart, but so really a break back above here would suggest that the uptrend is continuing. If you go back to the 4-hour and look at that, here's that rectangle we just drew on the 15. So you can see that's not really that far. If we broke back above here, that would basically put us back above the moving average essentially. We zoom in here. Here's that rectangle we drew on the 15-minute. Okay, if price comes back, takes this area out, we're basically trading back above the moving average anyways, and that would also confirm the long. All right, so this one's a little more dicey because the price action on the 4-hour is very choppy in here. It can really lead you to be confused, but really don't be confused. Just look at the price structure. And remember, the purpose of the moving average is only to help you time entries. I'm not using this moving average really for trend identification. I'm using price structure for that. The moving average is really just designed to help you time entries to get back into the trend. You wait for a price to close, in this case below the trend line, the moving average, and then you go drop to a shorter time frame and look for market structure to shift back in the direction of the higher trend on the 4 hour, and then that's when you get in. Okay, so I just wanted to point that out. The moving average is just to help time entries. It's not for trend. The trend I'm determining via the market structure levels. Okay. All right, and the last one here we'll cover is oil, and you can see I'm in a long here on oil. This is more of like a 1 hour entry, so doesn't exactly follow the rules, but if we go to the 4 hour, we can see, although it's choppy, we do have, you know, a trend in process going up here, right? It's been pretty choppy. A lot of these waves are overlapping. So ultimately, this may end up turning out to be a correction to a larger downtrend. But for now, we can see, we can draw this trend line. We're putting in higher highs, higher lows along the way here. So the last 4 hour entry time zone would have been right here. Okay, right at this level right here, when it came back to the trend line, and also was this dip below the moving average. So ideally right back here, but if not that one, then this one right here. I'll zoom in a little bit so you can see it. Okay, so this right here where price broke below and then started going higher. If you missed that, you had another opportunity right here where it pulled back again just underneath the trend, the moving average, and tagging this trend line. Okay, so where I got in, it's, I mean, I guess you could say it did break the 4 hour moving average on this candle right here. So it's probably, maybe it's not really that bad of an entry. This candle right here, okay, did technically close below the moving average, and then I got back in. Again, a little bit of a late entry. And again, I'm not really thrilled with this price action because these waves are all overlapping and choppy, but still it is an uptrend. And so I'm gonna, hold this for now. You can see, if price comes out and takes out this low right here, which is where my stop loss is, okay, that's where my stop loss is, then that invalidates the trade, okay, and then I'll wait. And if price comes down, tags the trend line again, then maybe I look for another bounce off the trend line. But again, my primary focus is on the market structure. So we take the trend line off and we just look at the market structure. It's somewhere between, this wick right here and in here. Somewhere in here is the market structure. I have it drawn on this lower one. But basically, as long as price remains above this area, then this is the structure. Everything above here, I consider it to be in a bullish market. Now, if this does go on to make a new high from where it is now, and it goes up here and makes a new high, then I would move my rectangle up to this area, okay, and that would become my new, this would become my new structure level right here, okay. So, but for now, I'll leave it down here because we have not made a new high yet. Again, if we make a new high, then we just move this rectangle up, and this area right here, where this little arrow is pointing to, this becomes our new structure area, okay. So that's it. It's just using market structure to define the trend and define when the trend changes, and use the 10 period simple moving average as your warning, or your, when you should start to take note of a corrective move that should start to let you look for resumption of the uptrend, in this case the uptrend. Okay, when price was going down back here, again we had this oops, let me turn off the scroll. Again, like right here, we had price coming down. Let's assume a downtrend here. Price breaks above the moving average. As soon as it gets above the moving average, I'm going to start, watching this very closely for downward price momentum to resume the downtrend on a shorter time frame. Same thing right in here, breaks above. You can see this one may have fooled you, depending where your stop loss was, because you can see it went down, popped up again, and then it finally went down. So if you have your stop loss on this one too close, let's say you had your stop just above, like sitting right at this candle, this wick right here may have stopped you out, okay? Now, if you were watching it and then it started going down, fine, you could stop out, you jump back in again. That's why I said you got to be a little bit cautious of where you put your stop losses. Don't make them so super tight that you get wicked out on stuff like this, okay? Because that's really a bummer. especially if you end up missing the move. But basically, the concept's still the same. Price breaks above the moving average, then you're waiting for bearish price momentum to take over again, and you go back short again. Okay, and then same thing around here with these long positions. Price breaks below the moving average. As soon as you get bullish price momentum, you go back in long again. Down here, over here. Okay, and then technically where we are right now too, because we had this break below, wasn't a strong break below. The price did basically break below the moving average right here with this one candle. Okay, and then bullish price momentum back to the upside, and then you're back in long. Okay. All right. So again, guys, price structure, that's how you determine your trend. Okay. The 10-period simple moving average is simply a way to help you time your re-entries and tell you when you should be on the lookout for a re-entry. And the best low risk entry on this time frame is to wait for price to get back above the moving average, in this case for a downtrend, okay, above the moving average or below it for an uptrend. Those are the lowest risk trades. The price is pulled back into an area where you can have potentially much lower risk, and then you can just drop to a shorter time frame, 15-minute, 5-minute. You're going to look for the shift back in the direction of the larger trend, and then you jump in. Put a careful stop loss on there so that that so that you're not getting yourself caught on a wick. But overall, even if you do get stopped out because of something like, say, like this, that's fine. Take a small loss and then you jump back in, take the next signal, go short again. You would have well made up for that, for that little loss maybe you took, over here. Okay, nothing's perfect. It's not going to work every time, and you are going to eventually once in a while have a stop out like that, even if you ultimately were correct in your decision because of just liquidity sweeps and just market manipulation like this. Okay, so so just watch where you put your stop loss. Okay, don't be so tight with it that you end up getting wicked out of a position before it can go in your favor. Give it a little breathing room, but not so much that you're putting big risk on the table. You can always add to your position later, so size it right and put it, just put it what makes sense for a reasonable stop loss. All right. So I hope that makes sense, guys. Just a quick jump over to Forex. Dollar Swiss, kind of the same story here. 4-hour chart. You can see I've already drawn the trend line out. You can see we're clearly in a downtrend. I do have this structure level drawn, which is the last touch on the trend line. This is a pretty big zone. So again, from a standpoint of, let's just take the trend line off. Okay, well, does this look like the proper zone? Well, prior to this pullback right here, the right zone would have been here. We had this low, made a new low, came up, so we had this structure. Then this got broken, and we move it down to here. But look what happened here. We have equal lows. So I don't know what's going to happen now. So I would say right now for this pair on the 4-hour chart, I'd be waiting for price to break this structure level right here, come up and take out this area. Okay, and then I would probably consider this trend to be changed. As long as this area holds, I'm still looking for shorts. Okay, because again, the only reason why this kind of concerns me a little bit is in terms of the downtrend being intact is because we did not break these lows down here. Okay, so then the other question is, well, maybe the right zone is still up here and this one is really just part of this down move, but this is a pretty big pullback, so I don't think that's right. So this is what I'm saying, like there's a little bit of art to this too, and you just have to kind of use the probabilities. Okay, so but for now the dollar Swiss is still in a downtrend, but it's definitely in jeopardy because again we had this double bottom put in and we are approaching this zone. Again, if price comes up, takes out this zone, and we get some impulsive bullish action, then I would probably switch my bias to more bullish on this pair. And of course, the euro dollar would be the opposite. You can't really draw a trend line on this uptrend, because look at this huge space right here. And again, this is the limitation of trend line. So if we take that off, okay, you can see we were making higher highs, higher lows, you know, coming below the trend line, the moving average, moving higher, below the trend line, moving higher, and now we're heading down. And now we have this price structure right here that's technically been broken. So for me, I would like to see another little pullback, and then if this pulls back, and as long as like this area holds right in here, if this pulls back now and then starts to move lower, to me that would definitely confirm a downtrend. It looks like it might be now because again, we took out this structure, which is this previous swing low on the 4-hour, and now we're heading lower. If this confirms and creeps up again, comes down, and proceeds to take out like these lows again right here, all right, these lows get taken again, then that would, to me, would definitely confirm the downtrend starting. And again, that would make sense. If the dollar Swiss is going up, the euro dollar will be going down. They are inversely correlated. And that's why I look at them, because sometimes one is more clear than the other in terms of structure. But if you can confirm an uptrend on one, you should easily be able to confirm a downtrend on the other, or vice versa. Okay. And if you can't, then that probably indicates choppy sideways or indecision. If you can't identify a trend on either one, probably better just to stand aside and not trade either one until it becomes more clear. But to me, that's what it looks like. There is some potential, and I'll flag the word potential, of trend changes starting on both of these pairs. So I will be watching this very closely heading into next week. All right, but it's the same still process, using the market structure on the 4-hour chart and then using the moving average to help time your entries when you're within the trend. Okay, you wait for the price to pull back above or below the moving average, depending if you're talking about a downtrend or an uptrend, and then you just drop to a shorter time frame, 15-minute, 5-minute, whatever. Look for that change of market structure back in the direction of the longer term time frame on the short time frame, and that's when you take your entries. Place a reasonable stop loss that gives the trade a little bit of breathing room, but it's not too crazy, but just a point where the trade would be invalidated. So, and just let it run and see what it does. And because these are 4-hour charts, if you catch the trade early enough and early enough in the trend, you theoretically could let these run for a long time. And then every time it pulls back to the moving average again, you can add to your position, right? Just keep, or trail your stop along the way, or add to the position, or do whatever, because these really should be swing trades, okay? Because you're trading on a 4-hour. So, all right, so I'll leave it there, guys. Hope that was helpful. And if there's any questions or comments, leave them down below. Like the channel, subscribe, and I will talk to you soon. Hope you guys have a great weekend, and talk soon. All right.